Whether you're buying, selling, or investing here in Bryan-College Station, you need to know what's going on in our market. Prices are up, inventory is dropping, and rates are volatile. So what is it that you need to know to make the best decisions for your real estate here in Bryan-College Station? That's what I'm about to fill you in on in this month's market update for January 2025 in my favorite towns of Bryan and College Station, Texas. Guys, this is gonna be a good one. If you are new to the channel, it's nice to meet you. My name is Greg Schwartz. I'm an investor here in Bryan and College Station. I have a portfolio that consists of everything from single-family houses to fourplexes, from long-term rents to short-term rents, and I'm here to fill you in on everything you need to know about investing here in my local market. I also happen to be a real estate agent, so I can help you with all of your real estate needs. Most importantly, today I'm going to tell you exactly what's going on in our market, and please hang around to the end of the video where I'm going to fill you in on my bold predictions for 2025. The data just released is current as of December 2024, which means we now have all of 2024's data and we can compare that to the previous year. Of course, we want to start off with the median price. So for the entire year, the average median price here in Bryan and College Station was $314,307. The good news is that is up by 4% year over year. We have officially appreciated by 4% compared to the year prior, and that is pretty strong. Slightly lower than our running average. Our 30-year average for median appreciation is right around 4.7, so we're a little bit softer than what we've seen as an average, but really it's not too bad compared to other markets like Austin. So we see a strong appreciation, and a lot of that is due to our strong economy and growing population. Bryan and College Station is just a good place to buy. The next number that I like to look at is our active inventory. You see, I want to know how many houses are in the market so we can look at things like supply versus demand, and active inventory is a good measure of that supply. What's interesting is we are up year over year in terms of the active inventory in December of 24 compared to 23. We're up 27.3%. But if you've been following this channel long enough, you know that I am more focused on recent trends. So since September, the active inventory has been dropping. We maxed out just shy of 1,200 units in September. We're now down at 1,041. So that is now indicating that we are getting less inventory, therefore less supply. The next number we want to look at is months of inventory, MOI. Months of inventory is the way that agents determine whether or not we're in a buyer or seller's market. Basically, it measures how quickly things are selling. Not so important is the actual units as to what the number represents. And so in a balanced market, we have roughly 5 months of inventory. That means that the buyer and the sellers have equal opportunity. Now, if the number is lower, the sellers have the upper hand. Well, as of December of 24, we had 3.9 months of inventory, which is up compared to 3.1 of last year. So again, that means that you as a buyer have more advantage than you did last year. And if you are a seller, you have less demand on your product than you did the year prior. But again, what's interesting to note is the months of inventory, similar to the active inventory, have been dropping every month since September. All this leads me to believe that we are in now a market that might be swinging back towards the advantage of the sellers. The increased demand might be a result of people just being tired of waiting for rates to come down. I have a bold prediction at the end of the video, so hang tight for that. A fun number I like to look at to determine whether or not my buyers are going to get a good deal in this current market is the sale price to original list price ratio. Ultimately, this looks at how cheaply does a house sell compared to what it was originally listed for. This accounts for things like price decreases and a buyer negotiating a lower price. So in 2024, we had a 96% ratio. That means that buyers are getting houses roughly 4% under the original list price. Now, this is down from 97.2% in 2023. And again, it just indicates that we are in a market that is more favored towards a buyer, and buyers are able to negotiate with sellers on these houses, and sellers are having to drop prices in order to move inventory. Again, this is another trend I will continue to track to see whether or not we shift back towards a seller's market or whether my buyers will continue to have the upper hand. Of course, I can't do a market update without talking about the biggest number, the elephant in the data room, and that is mortgage rates. Well, according to Mortgage News Daily, my go-to source, the 30-year fixed mortgage as of this recording, January 14th, 2025, was 7.25%. Now that's actually pretty dang high. In fact, we haven't seen rates this high since early summer of 2024, but it is in keeping with what we've seen since 2022, where rates crossed over 6% and have bounced between 6 and 7.5% ever since. So yes, we are high, but this is the same high that we've been seeing for the last few years, and quite honestly, I think it's becoming the new normal. All this means is that the expense to a buyer is going to be higher because interest rates are higher. And my overall advice to a buyer right now is if we see a dip in mortgage rates and you are shopping, lock it in now. It might even be worth paying your lender to lock in your rate a little bit longer, because I'd much prefer a 6.5% interest rate to a 7.5% interest rate. What does all of this mean? Well, if you're a buyer or one of my investors out there, guess what? There's a lot of inventory. So there's a lot of houses to choose from, particularly on the single family side. And we know that on average, you've been getting roughly 4% under asking price. So you could probably get a pretty good deal out there. Basically, you have the ability right now, more than you have over the last few years, to buy a house under market value and have built-in equity, and that's a good thing. Of course, you're combating these high interest rates. That's not going away anytime soon. So what I recommend is ask for the seller to provide a seller credit so you can buy down that interest rate, or do what a lot of my clients did and go buy a new built house because the builders are providing interest rates as low as 5%. Outside of that, for my sellers, you just have to realize that we're not in the feeding frenzy we were in 2 years ago. You're likely going to have to sell your house under asking price. But the good news is the recent trend is in your favor. So that brings me to my bonus section and my client question, which goes something like this. Greg, what do you think is going to happen in 2025? And the simple answer is, I have no idea. But I am willing to make a bold prediction, and it goes something like this. Basically, nothing's going to change. Yes, the demand in the spring will probably continue to lower our inventory, but not to any significant degree, which means buyers will still have a lot to choose from. I think that the demand will remain weak due to the high interest rates, meaning that sellers are going to have to either lower their price or provide concessions in order to get a buyer to buy their particular house. Furthermore, due to the Fed's recent announcement that they're only going to lower rates twice this year compared to the 4 that they were predicting before, they said they were going to drop rates 4 times, now it's just twice. What that means is interest rates are going to do what they've been doing for the last few years. Since 2022, we've been between 6 and 7.5%, and I don't see that changing. Honestly, best case scenario, we're in the low 6s at the end of 2025. So if you didn't like what's going on in the market in 2024, I don't think you're going to be happy with 2025. But if you're like some of my buyers who are looking to get a good deal on a house and willing to do some creative strategies to drive cash flow, then 2025 could present an awesome opportunity. Guys, if you have a question you want me to answer, drop it in the comments below or contact me directly. Of course, all my contact information is in the description. As always, I'll have a new video every single week, and I please ask of you to take it easy until then.